Okay, so David, straight back to you and the discussion we had the other day about using the daily and why the daily is so important, to as a starting point for analysis and for the, I would say, idea throughout the trading day, obviously from an intraday perspective. Now, looking at euro yen, for example, here on the daily. Now, if you recall from, I don't know, not yesterday, the day before, when we hopped onto that that session live, I still said that we're waiting for a slightly deeper push into this area to obviously, provide a lower time frame fake out, to reject and continue, and that's exactly what happened. Obviously, price sat in some consolidation there while we were trading at that key area. And then obviously on the fundamental releases yesterday, price started moving, and well, we were left behind as there was no confirmation to get into that on the lower timeframes. I did monitor price throughout that movement. So yeah, it just is what it is. However, now looking at this, okay, looking at the daily time frame before we go any further, you'll see that the daily has now rejected this level, right? That is a key resistance. You'll see that if we just have a look at simple market structure, we've got the break, we've got the retest, and we should now see continuation, okay? That is just simple market structure, price action. Now, obviously that is over the higher or the longer term, and that is the higher time frame. We do not have to see price trade into equal lows. Again, that is why it's so important to look at it from an intraday perspective, if not a session perspective, and just take the small pieces out of the market as price trends. Okay, so now looking at the daily time frame, looking at the area we have rejected, look at yesterday's daily close, strong bearish engulf. Okay, so that the close of yesterday has now broken key structure. We've broken structure here. Right, on the lower time frames, might not be too clear to you now, but you'll see this on the lower time frames. We've broken the structure. We have now shifted intraday momentum, which means we can start looking at selling opportunities. Now, if we just look at the plan and we look at, trading in line with the plan, what would we look at executing based off of? This would be the play we would look at, right? Simple. You understand that? The community members, course members, you understand that, what we're looking at?
Yeah, 100%.
Okay, so now with that in place, right? With that in place, we're not going to execute based off of that, okay? Because that's a 100 pip stop. It's a 400 pip target, and that is a swing trade. We don't swing trade, okay? We intraday trade. So now with that in mind, that there alone is the bias. We've formed the bias. Now we know what we're looking at. Now we know direction. Now we know trend, all right? Now it comes down to refinement and breaking down price and structure on the lower timeframes to start looking for potential areas in which we can get involved. Now, excuse my voice. Looking at refining the zone there, you saw that consolidation. Once again, the order accumulation phase. All right, over there, you would have seen that we had the small fake out on the lower time frame, just tapping a premium price above that there. A lot of people would have, or a lot of traders would have been trapped over there, okay, premature selling. And this is often what we see. We have the tap, we tap a premium price and we then close back below, giving us a fake out at a key area to then shift. We've now broken the bottom level of that consolidation, and there is the shift in structure. You can see we are obviously bearish. Now, given what we've just covered on the daily time frame, there are two areas for potential entry. Excuse me. Right, the first area would be the most recent structural break. A retest for price to grab liquidity to continue. Okay, that is the first area in which we can start looking at potential shorts. We are not going to buy the retest if price does retest. Why? We have shifted, momentum has shifted, trend has shifted. We've got a strong sell-off, and when we've got a strong sell-off and we've got such strong momentum, we don't know how far price must retrace. Price does not have to revisit this price point, okay? It can turn over here at a minor level. We don't know that. That is why we do not trade against momentum, okay? So If price happens to pull all the way back to retest this most recent structural break, we can then look at potential shorts over here where we'll trade into the into yesterday's low. Okay, so boom, wait for lower time frame or break in lower time frame structure, wait for the lower time frame accumulation phase to play out, and then wait for a breakout to then continue short. That's the first play. Second play is a break of yesterday's low. Okay, now a break of yesterday's low, you'll see, yes, if we just look at most recent structure, that's great. But now, why are we not looking to the left? Well, we know that this level will hold to the left-hand side, and there you see it, okay? There you see the level holding to the left-hand side, okay? So looking at that, there is obviously room, given that price has reacted just above the flat psychological level of 136.59. Let's call the premium low there 0.591. Obviously, the flat psychological level sits at 0.500. Okay, so now the point I'm getting at is you'll see how that entire support zone extends from the bodies of those two candles, incorporating the wicks over there. Okay, those two wicks. It extends from there into the candle bodies of these two candles, as well as, well, that obviously incorporates the low of yesterday. Okay, so what we could potentially see is we could see price get below yesterday's low. All right, we could see it push into the bodies of those two candles, reject to close back above, and that is where we could potentially see the pullback into this area. Right, that is still a potential play, and that still could happen. So we need to be very careful. We need to monitor price here. It's not as simple as just waiting for price to crack the wick low and then look at selling, because we do have that flat psychological level that sits at 136.500. So let price break that, and let price then create lower time frame structure, be it 1 minute, 5 minute lower time frame structure, to then get below the fresh low. So let price create a new low, okay, within this key zone at the flat psych of 0.5, and then look for confirmation below that fresh low, which will then obviously come to breaking out of this gray zone. Okay, once we get that, we can look at a continued push down into this wick region over here, and once again, you'll see how that ties into the next flat psychological level of 136. Okay, so that would then serve as target, and that gives us around, let's say, 45 pips. Okay, 45 pips. So that would be the play that we would be looking at. So it's either we pull back and we retest this area to then reject to continue short into this into yesterday's low. If we do not get that, we could then see price push, create a new low here within the critical zone to then get below that new low and continue pushing through this range into 136. So those are the two plays we are looking at throughout today. And that is just momentum trading. Like I said, I personally will not be looking for buys to complete the retest, although that might be a valid setup, although it might be a valid play. It's, for me personally, we have taken out momentum or market structure, and that would then be trading against momentum, and that is the biggest red flag in line with my plan. So I don't do that. So that's what we'll be waiting for. Now, just to quickly dissect this further and have a look at market structure and the three market cycles here, because we've got all three market cycles, right? Well, we've got the two that have been completed, and we're now into the third cycle. What am I referring to? Well, if you want some clarity there in a perfect world, you can head over to the community portal where I break down that exact explanation, market cycles. Anyway, looking at this in a live market, you'll see that we are bullish. There's no doubt about that, right? Bullish market structure, some consolidation, which obviously occurs at a key area, and we then get out of that and we break to continue. So the three market cycles come in where we've got the bullish cycle, a series of higher highs and higher lows. You'll see that there, the higher low, another higher low that's forming over there on the retest of the previous broken higher high, to then continue pushing. We have then created another, what should have been the new higher low, but it doesn't surprise me that we've spent some time in consolidation at this key area. Within this key area, and we then obviously enter an accumulation phase, and then we reject, and we break out of the accumulation phase, and we shift into the next market cycle of the bearish cycle, where we then start seeing a series of lower lows and lower highs. So there it is in plain sight in a live market. You'll see how, structure is very, very, very important over here. And if you really wanted to incorporate a trend line into that, you'll see the trend line break over here. Once again, that trend line break just comes down to the shift in structure, which then takes us into the new market cycle. So bullish, buy. Well, you'd buy, trend line touch, buy, okay, which is just a retest of the broken structural point to the left. To continue, boom, you would have bought here on this trend line, you probably would have taken a loss because we have not taken out that key area and we have already retested. Boom, okay, we break the trend line. That break in trend line, all that comes down to is a shift in market structure from bullish to now bearish. All right, and at the top of the trend line, before we have the break, we have an order accumulation phase, which is what you see there. That order accumulation phase occurs at a critical price point, usually on the daily time frame. All right, so that's just a brief summary of that. But obviously, we are now sitting in the bearish market cycle, so we will start looking for potential shorts to continue with this momentum, just purely based on the daily time frame. So there is definitely room, just criticizing the current daily candle, there is definitely room for this candle to flip bearish and continue pushing. So we'll see what we get. Looking at the daily time frame quickly, just one more point. Obviously, we had the most recent structural break up there, but looking at the daily, you would see that we've got quite an important zone there as well, right? And that's why I'm saying to you, right, if we go down to the 4-hour, right, that is why I'm not looking for buys, because we've identified, if we just have a look at that, we've identified that as the most recent structural break. By looking at the daily time frame, I don't see price pulling all the way back into that level just by looking at yesterday's daily close. The momentum, the strength of the momentum that we have, I don't see price pulling all the way up against that, okay? Which means we might see a reaction here. Why is that significant? Well, firstly, it's a zone here on the 4-hour, but on the daily, it's just the, let's get technical quickly. It's the 50 to 75% retracement on that bearish engulf, which ties into what? Either a 50, 61.8 or a 38.2 on the fib retracement. Let's just put this fib retracement in. Right, there you go. And boom, there it is, 50. Right, the 50, because on the fib, those are the two most important levels. I mean, the three most important levels, sorry, the 38.2, the 50, the 61.8. You'll see how the 61.8 ties into the most recent structural break on the 4-hour, right? There it is, 61.8. Look how that ties into the most recent structural break. Boom, okay? Then we'll break down the 38.2. Look at the 38.2. 38.2 ties into that structure there, that key area over there. And then if we look at the 50 is a minor zone within the middle of that range, okay? So that brings me to the point of, if we get above this 38.2, we obviously get above a key area on the 4-hour, which means we could potentially see a push into 61.8, which is the most recent structural break. But we've got to be mindful that there is a minor zone within the middle of that range, which sits at around 50. Where is that minor zone? Indicated here by the wick regions. Okay, you'll see how we have a wick region over there. We've got a wick region over there, and we have got a wick region over there, and that ties into a minor. Why is that not considered a major or a critical? Because it sits within a consolidation range on the higher time frame, right? So with that being said, that is why we do not trade against momentum, because trading this move here into the most recent structural break is very aggressive, given the minor we've got in the middle of that higher time frame range, right? So that is how you can incorporate a fib. Obviously there, it's just obviously bringing it into and tying it into horizontal levels once again. I don't know how many more times I must break this down for people to understand, but there it is. in plain sight. So that's what we're looking at on euro yen.